Thank you very much. Just to get us started today, I will start with a little bit of numbers. I hope everyone can see me now. I think I fixed it. Perfect. I'll start with numbers so that we can quickly get numbers out of the way and just start talking, right? We know that last year we about 1.3 to 1.5 million billion dollars, pardon me, was deployed into African startups last year. Can anyone guess how much was deployed to female founders? Just use the chat, please. We'll not be taking any live questions or notes today. Okay. Any other thoughts? 50%. What rock are you living under? Okay. Perfect. So last year, only 2% was deployed into female-led startups. And this conversation is one that we often talk about, even for those that are investors, for those that are founders. We often just brush through these conversations, but never really talk deeply about how we can work actively to change this. And today, that's the conversation that we're going to be having today with Amanda and Adesuwa. Just to get us started, Adesuwa, can you share a little bit from where you currently sit, how you think about the funding gap, what you've seen? If you can also share one experience without going into too much or sharing too much, what you think the funding gap in Africa is about.
Well, what do I think? I think it's embarrassing. And I feel like if I was a VC like listening to this, I would probably feel very embarrassed about that. Right. Do I have a personal story? So to be very honest, I don't have a personal story where somebody has told me, oh, I'm not going to invest in your company because you're a woman. Or if somebody has insinuated that, I probably just haven't taken note. But I know it's a problem that exists. And I've heard like stories fairly recently. I was even listening to a podcast, and this female founder was talking about how she was trying to raise money for her business, and she was meeting like a VC in person, but at the time she was pregnant. So then he starts asking her questions about how she's going to go about running the business in like the next 12 months because like she was currently like expecting a child, and he just goes cold after that. So I think like that's really sad, and female founders like experience like stuff like that a lot. Generally, I just think it's like embarrassing on the part of the VC, if I'm being honest. Yeah.
Okay. Thank you so much for your honesty. This conversation is we're going to lead with honesty throughout this conversation. And Amanda, where do you see the funding gap from where you sit? Do you think, and I'll go a little bit more further now for you, Amanda, do you see this in deal flow, or do you think this is because of deal flow? There's no deal flow, or do you think is decision making?
To be honest, it's a multi-pronged problem. I wish I could just see that the problem is from the VC or the capital allocators, but there's a demand problem and there's a supply problem as well. I'm not going to ignore the nuances that women face in trying to, raise capital, because I face that myself. I'm trying to raise capital for my startup. I understand the concerns around that, but I just want to speak more because we're speaking to women today, more about some of the observations I've had about women on the demand side of things. So a very interesting article that I read over the weekend was something that Babatunde Akinmosi, he posted, I think on Monday, and he was talking about microfinance institutions and about the records that people have about women repaying their loans better. I think we hear that so many times. Even I would say women are over mentored and underfunded, and then there are studies about women repaying their loans better. And then you now wonder, why doesn't this translate to actual capital allocation if women have been seen to be safe bets, or even safer bets in some cases than men? So one of the things that I would say, I would have been very defensive about this as a founder, but now on the capital allocation side of things, I want to talk about one real example and then just relate it to Babatunde's article. So Babatunde is one of our portfolio companies at Cascador. We're very proud of his work. So that's just a shameless plug here right now. But if you look at this now, a real life example, last year when Cascador was deploying capital to our alumni companies, the person who asked for the least amount of money was a woman. So it was during our underwriting process that a commercial bank, listen to that, a commercial bank had to encourage this female founder to double her ask in terms of what she was asking for in debt. So I just want that to sink in for an instant. So I do understand that this is also social, and then this is also, contextual as well for women in terms of when you're being asked questions as a female founder, the question is really about risk a lot of times. And then for men, it's almost how big can this get? So we've internalized this need to play it safe to the point that women are not making big risks that they can make to actually close out big deals. So the deal flow from women is smaller. I would say that's the demand side. The deal flow is smaller. So going back to what I mentioned about the article from Babs, is that women in microfinance institutions, they are 70% of the market. Women are 70% of the customers where capital does not require collateral, for instance. Then when you move over to commercial banks, women are less than 30% of the customers. Even if you're looking at a firm that can deploy up to 100 million of capital at once, women are very far from the higher margin of how much capital should be deployed. Then if you talk about how women even invest, if you're looking at it from the women being the investor type, there's a lot of caution in how women also deploy capital. The hardest conversations I've ever had to have were with female VCs. So I'm just saying this again. So it's something that we have to be conscious of. Contextually, yes, I could speak to the men all day, but I'm also speaking to the women about being a bit more audacious when you're building out your business idea, your business viability. I'm not saying go on with a plan that doesn't make sense or where the numbers are not right, but there is an issue with the scale of businesses that women are building. And of course, that's a demand problem. That's a deal flow issue. For instance, now people can talk about representation. There are not a lot of female allocators, but I've just given you one issue with that about women being more cautious when they invest. Another issue with representation is that it doesn't really change how much capital is being deployed. If you have a fund of $2 million and the women within your fund are only asking for $100,000, you are not able to influence how much capital is being deployed if the women are not demanding that capital, or if their businesses cannot absorb the capital that you have. So that's just one food for thought in how we build businesses. I could go on and on about this, on how we save and invest. If you're looking at women now, a lot of women have money in, I'm sure maybe it's one of your portfolio companies, but they have money in savings apps, they have money in investment apps, they have money in stocks. When it comes to accessing institutional capital where you need collateral, most women do not own collateral to be able to access high ticket investment amounts. So before I go on to the nuance of the market, I want to speak directly to women on this call to ask for a bit more audacity, to build things that, I hate to say things like a man, because there are lots of women that have now built institutional grade organizations that we're proud of here in Nigeria, to say, look beyond yourself. A lot of women are building for sustenance. They're not building institutional businesses. And that demand problem is affecting how we women on the other side of the table can deploy the capital. So that's one thing I would say. I don't, of course, I'm all for the women, but I just wanted to point that out. You can look at the studies from Money Point for 2024. You can see how women are repaying loans, but we need women to step up to the plate. So I'm speaking to the women first before I speak to people who are deploying capital. So that's one of the things I've seen real time, real life on how women are approaching capital.
Thank you so much for that. That was amazing. Thank you so much, Amanda. And times two on everything that you definitely said. I think that we, surprisingly, as I was preparing for this call, I had gone back to an event I attended, I think 2 years ago, and we had spoken extensively. It was at the British Council here in Lagos, and we've spoken extensively on how we can do better how we can support women better. And I think one thing that really stood out to me in that conversation, which over time, even as an investor, I realized is that we need the audacity. Sometimes you often hear women say, I need to get all of these things together before I send in my proposal. Men don't work like that. Whatever they have, they're sending it to you. But we often shy away from just sending out things, and just we want to ensure that we figured it out before we put it out there. So I want to also encourage men, just put it out. Yes or a no, at least you're learning from it. Thank you so much for that. So to my next question now, Ade, so I want to ask you, from what you've heard, do you see any alignment in what we've said from your experience raising funding? Or do you think differently? Or how did your fundraising journey go? I know you've raised a seed round. So how did that go? How did the conversations go?
Um, so I'd say that with fundraising, it was different things at different points, right? Initially, when we were trying to raise like our pre-seed round, it was mostly around, oh, this is what we're building, this is the amazing product that we have, and we can do this, and that. But then the bear market hit, and investors didn't even. Everybody was talking about macroeconomic conditions and why it wasn't like the best time for them to invest. So that was one. But eventually, what that then taught us was to stop focusing so heavily on like the, I don't know, sexiness of the product. Oh, my product is nice. My product can do this. And to be able to focus on like the business of the product. Can this product like make money? And can it like sustain? So when we started getting a lot of no's from investors, we then moved to like being heavily focused on like traction, right? Are people using the business? Does the unit economics of the business make sense? What's the path to like profitability for us, right? And eventually, over like some months, we got to profitability, and we're able to start having like better conversations with investors. Um, Again, it was still not easy. We applied and applied and applied and got like a lot of rejection. Eventually, we got into an accelerator. Then we're able to raise our seed round. But I would say one thing that was very pivotal for us in our fundraising journey was just like traction. You can't argue with traction, right? If there are numbers to back it, users are using this product. It's not just vanity metrics of I have 100,000 users, but how much are they paying you? Right, like how much are you making from these people? And like for us, like when we started to focus more heavily on traction, more heavily on like making it into an actual business than, oh, my product is nice, my products can do this, my app is fine, right? We started to have like more fruitful conversations with investors.
All right. Thank you so much for that, Adesuwa. I really enjoy the way this conversation is going. I can see Amanda smiling. I feel like you know what my next question will be. Now we've agreed, traction, having your traction is great. Outside of traction now, do you think that funding can also be attributed to, how much access that you have, networks, warm intros? How does that affect funding from your own point of view?
So I would say that access and networks, they matter in different proportions depending on the stage. So first of all, your deal can't even get seen if you're not in the room. That's the first thing. So it's not really all about the access and the network. So access can get you into the room, but it's really about the business viability before you can get funded. A warm intro is going to do a lot, but for me to actually write the check, or for any investor to write the check, it's beyond the access and the networks. I think access is very important at some point, because you need to be in rooms where capital is being deployed, your name needs to be mentioned in certain places. But beyond that, it now comes down to the business itself. Like, you can't network your way into fundraising. Yes, you can get into rooms. Yes, it does definitely help. And I think even from a lot of founders' perspectives, they feel like there's a private club in which you need to be part of before you get funded. That's something that a lot of founders really would say, oh yes, I'm not in that club, so I can't really get in. And yes, access is very important. There are ways that you can build that yourself. Relationship in today is still the number one currency, but I would say that it doesn't 100% guarantee that you'll be funded. So if, for example, I have access to rooms, I know the right people, I speak the right vocabulary, because there is a vocabulary for fundraising, and still my unit economics don't pan out, the business fundamentals are shaky, you would hardly find a seasoned investor that would give you money just based on the storytelling alone or based on access. Yes, I would say again, access gets you in the room. Your actual business proposition is what gets you the check. It does help to be in the room and speaking to, because I know that we have a mixed audience of founders and VCs as well, is that yes, it matters for your name to be recognizable, because it does give you credibility before you start the conversation. What it does for you is that you are going to be given the benefit of the doubt. So, for example, if it was a cold intro, a cold pitch deck, and you missed something in your financials, maybe nobody will get back to you. But if it's someone who I would say has a lot of social capital that did the introduction, you might get a response to say, "Oh, please, can you clarify this about your financials? I had a question around this." So it might give you the benefit of the doubt, but it wouldn't immediately just open people's wallets. So it does matter. The credibility matters. Building a good will I say a persona, a brand for yourself matters. It helps people feel like they know the brand already. If it's you're not strange, you're not coming there cold to talk about your business. So these things matter, but ultimately it's the strength of the business that gets you funded.
Thank you for that. Now, I just want to follow up with a quick question, and I'll start with you, Adesuwa. Because you had mentioned when you started fundraising, you got in no's until, you then put together your traction. Are people paying for this? Did you go back to those that said no? Or how did you handle that? Just for the founders in the room. How did you walk around them saying no, then going back to the drawing board and then coming back? Did you go back, or what? How did you handle that?
So you're asking, did we go back to some of the people who had told us no in the past?
Yes.
Oh yeah, for sure. So let me even share an interesting story. I mentioned that we got into an accelerator and that helped us raise our pre-seed. The acceleration that we got into is called Alliance, right? So when we first applied to Alliance, we got rejected. But they advised us the same accelerator thing, or apply like the next time. We applied again the next time and we got rejected. Then after getting rejected again the next time, we then reach out to one of the founders of Alliance to ask, "Oh, we got rejected this time again. Could you let us know some of the reasons why we got rejected, so that when we're applying again the third time, we can take those things again into consideration when we're reapplying?" And he sends us an email basically telling us like why we got rejected. Then he goes on to ask us a few questions that we then like answer in detail in this like Google Docs, and we send to him. Then he tells us to keep him updated with our numbers, essentially with our traction. But then we already have this readily available investor dashboard that we randomly send to anybody who is asking us about our numbers. And we sent some more to him. And he's like, "Oh wow, like you guys are really doing well. I'm liking the numbers. I wish I saw this like more of this like earlier." Right. And then he says that we should give him like a couple of days to go back and like have conversations with the people on his team. He has the conversation, and I think in 2 days he comes back to us and says, "Oh, we've gone back on our earlier decision. Would like to admit you into the program." Right. So that's one instance where like feedback literally like changed. Um, Saying change that story sounds dramatic, but yeah, feedback really helped us. Where like we asked for feedback from an investor that told us no, they gave us honest feedback. We had conversations about it, and that led to them like changing their decision. So yeah, I would say going back to like investors who say no. Of course, like we've had instances where we've gone back to ask people why they said no, and they don't answer you, right? Maybe they don't know what to say, or like they're just busy, or they miss the email. But like some people are kind enough and take time out enough to like really articulate their thoughts and say, "Oh, here are the reasons why I said no. And if you're able to get this, and this in place, let's have a conversation again."
That's great. That's great. Amanda, from your own point of view, does it signal a green flag when founders do come back to you and say, "Why did you say no?" And if you do give them feedback, when they come back again, what does that mean to you?
So I think that's an interesting question, because one of the things that we look out for at Cascador, apart from like the business, is the character of the founder. So someone coming back to ask for feedback is a green flag. I would say also depends on the stage of the conversation that you've gotten to. So if it's like the initial conversations where maybe there was no, I haven't looked into your business or anything like that, I might not have concrete feedback for you. Let's say you miss the immediate top criteria already, then that's a stage where feedback might not necessarily be something that the investor is able to give. So if we're opening applications and we say you have to be 2 years in business or you have to have X amount of revenue and you are just borderline, feedback at that point is almost obvious. Like, do you fit the criteria that the funder is looking for? I find that a lot of founders, when they're raising capital, it's almost like sharing church bulletins. You're trying everywhere, but like you're sending your pitch decks everywhere. You're not trying to find out if it's a fit for the companies that you're sending it to. And in that situation, if somebody was sending me requests or somebody like for feedback, I mean, it's almost like, do you match the thesis of what this investor is looking for? That's the first thing. Because you would be backing up the wrong tree. You'll be spending a lot of valuable time chasing people where you're not a fit. So that would be number one reason for frustration. But then again, if you know that you fit the criteria, I really like what Adesuwa said about alliance, because I've had a similar experience again as a founder, and it's something that I have applied before. So, for example, just tying to the two things that Adesuwa just said about traction and then getting back to people. So, an example that I would use from my days at Messenger is we applied to the Baobab network, for example, and they said, oh no, just an outright no. And then after the second time round, when we were applying, I was like, oh, hey, here's what you've missed since the last time you said no. We've now become a top 50 Africa Business Hero company. This and this has changed. And then this is where we are right now. And by the next time that we applied, we got in. So that's one way that, apart from looking for feedback, trying to tell people this is what has changed. Another tip is for people who send out investor updates, depending on how detailed you are or the stage of your business, I would add a key person at a fund where I want their money or where I want to get into their program to my mailing list, just to tell them things about the company. And because that also opens the doors for conversation, just letting them know what is going on. Again, another thing with investments is that sometimes there's FOMO, and you might have to create that, whether artificially or not, for your potential investors. So that's one thing that I would say has helped. We've had people, so it's very interesting how I say it, because I've been a participant at Cascador and then now I'm on the other side. So I've had people who have applied multiple times come to ask, okay, so what's the problem? And sometimes we're able to give detailed feedback, depending again, like I said, on the stage that the founder got to. And other times is to say, oh, it's not about your business. We have a limited number of applicants that we can take per year. So that's something I would mention to the founders here as well, that sometimes it's not personal, sometimes it's highly competitive, and people can only invest based on what their funding capacity is for the year. So it's not always about you. It's also, it requires a bit of persistence. So yes, go back after you've gotten feedback, but still understand that a lot of funds are dealing with a limited resource pool to disburse. So it might just be, better luck next time, or you're on the fringes, or just know that people are human as well, and they're dealing with almost the same capital constraints at a different level than we might be dealing with.
Thank you, Adesuwa, and thank you, Amanda, for that. I'll just add one more thing, which is something I tell our founders that do pitch to us, is as you begin your fundraising journey, have a list of people that you want on your cap table. And just to piggyback off what Amanda said, you just don't want to be sharing bulletin up and down. Have a list of the people that you really want on your cap table, that you believe would help your business, and then target them first, and then others can come later. So it's like a top priority, middle, and lower level. Every founder should have that when thinking about fundraising. Thank you very much. Now to the next question, since we'll be talking about capital pitching. I will start with you, Amanda. What's the one thing you say founders often either overestimate or underestimate while pitching their startup?
Okay, so I'll start with what they overestimate: storytelling. Most people think that if they have a great pitch deck, if they're able to tell a great story, then they'll get funded. But that time has passed. Um, I don't like to say the yesteryears were better, but now a lot of investors are asking, where's the evidence? Where's the traction? Where's the risk? Like, where's the money coming from? If I give you 1 million, how does that translate to value? So a lot of people are overestimating the pitch deck and the storytelling. And what they're underestimating is clarity and discipline. Sometimes being able to have one, this is still tied to storytelling, but having one clear value proposition. A lot of people say they're the operating system for something. I'm trying very, like, you're the operating system, you're the platform for this. It's better if you have a sharp, this is what people are going to use me for. And then understanding how the value of your business or your venture in today's economy. If you live in Nigeria or you're building for Nigeria, you know that you're competing with food. For instance, like, are people going to, forgo a meal to use your product? Are you helping people make more money? You have to be very clear on the value that your venture is providing. I think that people underestimate that. And then just the discipline. The discipline for me is in the operational discipline, the financial discipline, and the governance. It's very early days for a startup to think about having a board, but having advisors, having people that you can listen to, being able to show that there is some guardrails around the money, around the operations itself. It gives an extra layer of comfort to any investor. So I would say, yes, get the pitch deck right, but please have a better understanding of the financials and the unit economics of what you're pitching.
All right, thank you. Adesuwa, what do you think? Overestimate or underestimate?
What do founders overestimate and what do they underestimate?
Yes.
So let me just use myself as an example. What did I overestimate? And I think I shared a bit about this earlier. I overestimated like the product, like just talking like the product. Of course, like product is important. I'm not saying that it's not important. But you know how like sometimes founders can be, oh, my app can do this, my website can do this and stuff. Right. And because like you built it, it's your baby, that's normal excitement that you get from it. Right. But at the end of the day, it's really okay, like all these nice things you see that your business can do, like how does it contribute to the bottom line? Are you making money from it? Is there, so this is the part of like underestimating. So initially I was overestimating like the product, talking about how nice the UI was, all the things, all the functionalities. And I was underestimating like just the business part of it, right? Does this make money? Like, am I selling $1 for 80 cents? Right. And I'm excited telling people about my product, or does my unit economics like make sense? Is this like a business? Is there a path to profitability? Right. I would say that that's one thing that I underestimated. But then I quickly learned when like investors were telling us a lot of news and we had to find a way to survive.
Yeah. Thank you so much for that. Now, we've spoken about a lot of things, how you can get funded, how to on yourself, right? Now I want us to hold ourselves accountable and speak on what actually needs to change on both sides, on the investor side, on the founder side, to move this number. Over the years, we are seeing 2%, we're seeing 3%. The most we've seen so far deployed into women-led startups has been 7%, right? So what needs to change in the next couple of years for us to move this number, increase it, I mean, from both sides? I will start with you, Adesuwa.
Okay. So let me start with what needs to change on the founder side. On the founder side, I think like women have to do a lot of work to not like internalize the way that some people like tend to see women, right? And it's hard. Earlier Amanda spoke about how women need to like be audacious, women need to ask for more. And I get it, I agree. But like many times, like women have been conditioned to like ask for less because the few times when you ask for more, it's almost like you are slapped on the wrist. And yeah, it's almost like, what, like, how dare you ask for this? Right. So like it's just women like not internalizing that because you get a lot of people who would like look down on you just for you being a woman, but like not internalizing that and still being able to pick yourself back up and like go ahead and like ask for more. Right. Another thing that I would say on the women's side is more storytelling, like tell your story more, like talk about what you're building. When you raise it around, talk about like the process and how like you got there, right? Because what that does is you are signaling to people in general, potential investors that, oh, this is the problem that I'm solving. This is how much I'm making. This is the potential of this business. And you're also leaving the door open for people coming behind you to believe that, oh, this is also possible for me. I can also do this. I can also ask for this much money to build my business and get like this kind of results. Right. I think like just more storytelling, like just us being more passionate. We hear every time, like almost every week, somebody references like the pay stack exits. Right. But like I don't think many people talk about like the main one exit, Miss Funke. Right. And that was at $320 million. But like you hardly hear like people ash on that more. And she's a woman. She has done really amazing things as well. So I think like for women, not internalizing the negative feedback that you're getting and like not cowering and just like reducing yourself, but like still asking for more, like still being like audacious. And also like sharing your story more and just maybe one more on that part is like just giving back. Right. I feel like I'm a beneficiary of like women who have given back. One of like our first investors that are Accrue is like Ire Aderyoko. She was the founder of Bitcoins. Right. Like that's a female founder like paying it forward. Right. Another early investor that we had was Odun Ireniyi. That's another female founder like paying it forward. We see how like Odun and Eloho started like the first check fund to invest in like women founded and co-founded startups. Right. So like more just more women like paying it forward, right? And just building the world that you want to see. Then on the investor side, I would say is I think I guess like for the people who like the example I gave earlier about the man who was asking like the woman who was pregnant about like, oh, like yeah, that's not a kind thing to do, right? If you believe in this person's abilities, like you shouldn't do that. So I'll say that's for the investors, you should also create an enabling environment for women to um, ask for like what they deserve and like bring like the kind of results that they can. So like just creating that enabling environment. And for people who have like the mindset of um, maybe women just can't do this stuff, maybe just doing like the work to like see the world better, I guess. Yeah, but I think that's what I would say.
Thank you, Adesuwa. Amanda, do you have anything to add? Just before Amanda goes, if you do have any questions, please use the chat. We will soon be taking questions.
Okay, so one of the first things I would talk about that needs to change on the investor side is pattern recognition. If you notice, there was a time that people were funding mostly fintech, so everyone was adding a financial play into their business that might not necessarily have been the core of the value that they were providing. So it's more like we're looking for a particular type of business, and if it's not that exact, if it doesn't fit into that exact mold, then it doesn't seem investable because people are looking for where the returns will come from. So that pattern recognition needs to expand. We need to know that what might look like venture scale in Silicon Valley is different from what might be venture scale here in our local market. So that's one thing I would say, not using that cookie cutter a bit too rigidly. We are missing a lot of strong founders who are building things differently and are in different sectors. So that's the first one. The second one I would say is that access should be more democratized. That means that warm intros should not be the only primary gateway to capital in this market. There should be more structured pipelines, more transparent, evaluation processes, and just a more diverse decision-making panel around startups. So that's one of the things that I think that my role in Cascador has really focused on, even from the last year, to focus on not having just founders that are based in Lagos. People are building great things around the country. We expanded our pipeline to even go into northern Nigeria, and that's something that gave us a lot of joy to see that people are building great things. One of the founders, even from Abuja, that is doing great things, Accrue. So just looking beyond the regular watering holes and the pools to say, hey, let's widen this gap. Let's not just look at warm interest. Let's make this more transparent. Then the second thing is, I think we need different sorts of investment vehicles. VC does not fit most traditional African businesses. We have imported a model here, and we're forcing it into how people do business in Nigeria or Africa. We have a lot of cash flow businesses that might need revenue backed financing rather than an equity play. People don't need to give out large chunks of equity just to fund their operations. We need to start looking at blended finance, revenue based models, local currency debt, not at overly inflated interest rates. We need to start looking at local capital as a way to deploy and support entrepreneurs in this market. Then it won't be complete if I don't face the founders. Then capital readiness. I think people really underestimate how much discipline it takes to close out a round, not just resilience or being tenacious, but more about the clarity you need to have, the understanding of your financials. I would say that that was one of the key mistakes I made as a founder. I'm very great at closing deals. I'm very great at getting business. But how do you now go into the nitty-gritty of the financials? People want to give you $1 million and see how you change that into enterprise value of 3 to 5 million. You should be able to look at your business, whatever type of business it is, and articulate a clear path to scale or profitability for any investor. Then the second thing, again, matching the type of capital to your business. Look for people who can fund your business outside of just VC. VC is just one option. There are many other structures to explore. And I think finally, just so I don't take up too much time, is to actually lean into building networks more intentionally. And this is to founders. You shouldn't build in isolation. Relationships are a powerful currency to have. Yes, I talk to the VC side, not to focus heavily on that, but I think that founders should seek out relationships and ecosystems that position them within capital networks, because like it or not, access plays a very big role till now. So until we, get it right there, also try to build your network more intentionally.
Thank you so much, Amanda. To my final question for the evening before I open it up to the audience, if you have any questions, again, use the chat so we can ask our speakers some intentional questions. For the female founders that are currently building, what's one practical thing? I know we've mentioned a lot of things that they need to do differently, but what's one practical thing that they should start doing differently immediately? I will start with Adesuwa.
I was hoping you won't start with me, but it's fine. What's one practical thing I think female founders should start doing immediately? I would say, I would really say like being a part of like founder communities more, right? And because I think like that's one thing that men tend to like excel at, being a part of like community, whether it's like founder community, tech community, engineering communities and stuff. But like just women being a part of like founder communities, like more intentionally going to like those places where like you're able to meet other female founders, not just even female founders, other founders in general, other VCs, because like those things tend to have a ripple effect. It's not even for the case of what I want to raise from this person now, but like just like having conversations with the right people, knowing the right people. That's like something I genuinely like really benefited from with like building Accrue, where like just having like a network of founders that you can reach out to for like help, to ask questions, and like this building those relationships over time, they're able to vouch for you more. So some of those like warm intros that you want, because like they know you, you're a part of this community, you're not a stranger, they're able to like refer you, or telling somebody, oh, I think you can take a look at this founder. I think this founder is building something like really amazing, right? So yeah, not just being in your own, like building in silo and just like living that insular life of, oh, I'm building this particular business and I'm just head down focused on it, but going out intentionally to like meet people, going out to like talk about what you're building, being a part of community, and just yeah, seeing where that takes you.
Thank you. Just to follow up quickly on what you've just said, are there any communities that you can outline for those in the room right now?
Okay, I think like where to start, maybe not even. So, for example, where I started was when we started building Accrue. Some of the people that I had worked with in my former company, like the founders, we created like a group chat with them.
Hmm.
Right. So it's not even maybe you sourcing out like specific communities online. Of course, you can do that. But like what is like immediate to you, where we created a group chat with three of those founders. They led us to like several angel investors that ended up like investing in our round. When we're applying for accelerators, they would recommend us, right? Just like things like that, where it could be like the people you've worked with in the past, just like maintaining the like open communication with them, telling them what you're doing, also being in their lives. And yeah, I think like there's so much benefit that comes from that.
All right. Thank you so much. Amanda, one
So my
thing. Yeah.
one thing I would say, have a grasp on your numbers, especially as a female founder. You don't want your business or your idea to be seen as a soft or a small scale idea. Being able to fluently communicate your numbers is something that will set you apart from most founders, not just female founders. I would say that after this call, maybe have a call with your accountant or your finance lead and be able to translate what your strategy is into the actual numbers, and just have a look at your numbers. That's the first thing I would say. If you're very conversant with that, the kind of conversations that you would have with investors or even with other capital sources will be very different if you're able to speak fluently in that language.
All right. Thank you so much. Do we have any questions from the audience? I see lots of reactions. If you want to ask them any questions, this is the time to ask them questions. Wow, great section. Then I want to give a big shout out to Adesuwa and Amanda. This has been amazing, amazing. This conversation has been flawless. I really enjoyed it as well. Even as an investor, I'm picking things that, I should be looking out for when I'm evaluating startups as well. So this has been amazing. Thank you so much, Amanda. Thank you, Adeso, as well. I would pass it
Yeah.
now. Please feel free to follow them on LinkedIn if you have any questions for them. I'm literally doing office hours for them. I don't even know if they'll like that. But you can reach out to them on LinkedIn as well. Thank you so much. I will pass it on now to my colleague Bolu to take it on from there and share a little update from our end to our members.
Thank you, Adesuwa, Amanda, and Folakemi. It's been a very insightful conversation. And apologies for ending the conversation with my face, since this isn't really about me or my gender. My name is Bolu. If you don't already know, I work as venture operations at HoaQ, and I'll just give you a quick update once we can get the slides back up. Yeah. So, next slide, please. So for those of us on the call who are members of the community, we currently have 2 deals live that are closing soon, Middleman and Paid. And very interestingly, both of those companies have their chief operating officers are both women. So maybe it's time to, walk the walk and, not just talk the talk. So if you're an investor, please give it another view just to see if it's a deal that, aligns with your investment thesis or your personal investment thesis. We also, the slides are not currently on, but I'll just keep going. if you've made a commitment or declared interest, please go to the Borderless platform and complete your investment before it closes. Those deals will be closing very soon. We typically host a couple of events, both virtual, like the AMA session of today, which we do monthly, and sometimes we are able to host in-person events. So if you're interested in, some of those potential events, you can go to www.hoaq.co. I'll put it in the chat just for anyone that is not a member of the community and is interested in signing up to know when we have events or what, potentially is a way to be a part of this community. If you are interested in joining the community, we're very happy to have you. If this is your first time with us, thank you for joining. You can also go to www.hoaq.co and you'd be able to join our community and be able to be a part of being able to invest, into the next big startups that are funded by not just, male founders, but female founders as well. So thank you so much. And yeah, it's been a great conversation. If you do have any questions, feel free to still share it with us, even if the call ends, and we'll figure out how to, share it with the community or with Adesuwa or Amanda. But yeah, thank you so much for joining, and it's been a pleasure having you all.
Thank you. I just want to add, I know this conversation is not about us. HoaQ, again, is a community of angel investors, which means that we're not only investing in startups, but we also have our own community of operators. So I know Adesuwa had mentioned you need to join other people. You don't need to build alone. HoaQ is also a community where you can speak to other operators, you can speak to professionals who are also building amazing businesses, not only deploying funds, but they're also building as well. So thank you everyone for joining us. Hopefully I would see you all next month, same time next month, last Thursday of the month. And also follow us on our socials. You'll be able to see more information about what we do, the deals that we currently have live, as well as events as well. Thank you everyone, and do you have a great day. Feel free to also stay behind and speak amongst yourselves. I'm happy to speak to anyone that wants to speak as well. I see people are still trying to join.